Hello everyone, Dave Landry here from DaveLandry.com, and this is your Daily 5. I am so excited about this market right now. S&P 500 at multi-year highs, one good afternoon away from all-time highs. NASDAQ at multi-year highs, not too far away from all-time highs. The Qs are right at all-time highs, and crypto is on fire. Let's dive right into it. First of all, let's talk about the TFM 10% system. Now, the designer's intent here was to get out of the way when things begin to go awry in the market. And my theory here is if the market's going to drop 50%, it's going to drop 10% first. So we look to exit around 10% or more. I'll walk you through the rules here in just 1 second. And again, the idea is to get out of the way when the market becomes a little bit on the iffy side. And what I want to avoid is the so-called diaper change moments, and that's from Ian McActivey. And my theory here, again, is once a market starts behaving badly, it often continues to behave badly. And 10% is a good round number for that vis-a-vis the S&P 500. So let's take a look at the rules real quick. Simple rules. You use a weekly chart, and you want to get out of the way. You want to exit when the market closes 10% or more away from its 50-week closing high and closes below the 50-week moving average. Now, we just had a sell signal a few weeks back, and guess what? It didn't work. That's fine with me. I'd much rather get out the way and then come back into the market on a buy signal. There's an old hedge fund adage, he who fights and runs away lives to fight another day. Now, the buy rules are a little bit more stringent to help avoid being whipsawed in and out. So for a buy, you need 2 bars of Landry Light. We're going to take a look at Landry Light in just 1 second, but just so you know, that just means that the low is greater than the moving average. In this case, using a weekly chart, using a weekly moving average, a 50-week moving average. So you need 2 bars of Landry Light. So we have bar 1 here, and then bar 2. You would actually buy on that close. Now remember, this is a weekly close, so we'd actually buy the market on a Friday. Now, again, this was a whipsaw signal. We exited the market here, and then a couple of weeks later, or 3 weeks later to be exact, we received a buy signal. Greg Morris once pointed out that whipsaws are frustrating, bear markets are devastating. You can survive frustration. So S&P 500 looking pretty good. Like I just said, just off of all-time highs. Let's take a look at these zones. Now here's the Qs. I'm actually long the Qs from 319.49. So I have about 80 or 90 points so far based on this signal. I thought it would be fun. I know you want to party with me, but I thought it'd be fun to put on 100 shares and just follow the system mechanically. Now, keep in mind, I am not a mechanical trader, but I have developed some mechanical systems over the years to help keep me on the right side of the market. Now, what I've put in here is some zones, and you can plot this in StockCharts. This is my plugin, and you have percent of close, and then obviously just a simple moving average. And I shaded these so you could see so it would highlight the areas. Now, one of my clients recently pointed out when you get 5% or more away from the 50-week closing high, that's a good time to think about getting out of the market. Now, if you traded it mechanically like that, you'd have a lot of whipsaw, but he is right. Many times the market drops 5% and then it keeps on dropping. So the theory is, once again, once the market drops 10% or more away from its 50-week closing high, you need to look to exit. And the official rules, again, are 10% or more away from its 50-week closing high and a close below the 50-week moving average. So here's a recent buy signal. As you can see, we had bar 1, bar 2 of Landry Light, and we were within 10% of the 50-week closing high. And again, so far so good. This has been a good signal, up about 90 points or so. Now, let's talk about Landry Light in a little bit more detail. Landry Light, again, just means lows are greater than the moving average for uptrends, and the highs are less than the moving average for downtrends. If you paid careful attention to the greens and the reds, it could really help to keep you on the right side of the market, or in some cases, maybe even out of the market. So if you look at the S&P 500, I'm using the 30 EMA. with this. You could use your favorite EMA. Again, we use the 50 simple with the TFM 10% system. For Landry Light in general, on a daily chart, I really like the 30 exponential moving average. So down below we have an indicator. I like to see indicators as more of illustrators. It shows you what's actually in the chart already. It doesn't indicate anything. In fact, anyone who claims they have an indicator that indicates what's going to happen in the market, I would be highly doubtful of that. The good news is, though, they do have uses as illustrators. So when you have a lot of green, for instance, like right here, you can see the market generally worked its way higher. When you have mostly red, the market tends to sell off because the market is underperforming. And right now we've had 33 days of upside Landry Light vis-a-vis the 30 EMA. Now this indicator is available through my plugin. Just like the video and then click down here and you'll get the plugin for free. Now notice again, you can see mostly downtrend, mostly red. Nice little uptrend, mostly green. Downtrend, mostly red. Now when it's flipping back and forth between green and red, you're in a choppy market and you might just want to sit on your hands. Now this works in all time frames. So let's take a look at a weekly chart. Notice all the green we had coming out of the pandemic. This was a really, really nice, obviously, trend, nice little bull market. Then we had a bit of a bear market where the market slid for a while. You can see we had mostly red down here. Again, red means that the highs are less than the moving average. And now we've had 7 weeks of upside Landry Light. And as I said a second ago, we're just off of those all-time highs, maybe one afternoon away. Now, as you go through all of your sectors, there was too many to fit into this presentation, but sector after sector after sector is doing fantastic. One of my favorite sectors to watch is the semiconductors, SMH, right at all-time highs. It's good to see the semis confirm what's happening in the overall market. Now, one thing I've been watching lately is the dollar. Keep in mind that intermarket technical analysis only matters when it matters. I'd encourage you to learn about it, but don't try to trade off of it directly. But right now, the dollar seems to matter. As the dollar weakens, obviously Bitcoin is getting stronger, and right now stocks are getting stronger. Commodities in general should go up as the dollar weakens. So as far as stocks and Bitcoin and commodities are concerned, a weak dollar is a good thing. Now, you might argue that a weak dollar is bad for other things, but it's good for stocks and it's good for commodities again, and it's good for crypto. So I've plotted bow tie proper orders. I have a setup called the bow tie that uses a 10 simple, a 20 exponential, and a 30 exponential. And one thing I noticed after I began trading the setup is just paying attention to the proper order. For uptrends, the 10 is greater than 20 and 20 is greater than 30. For downtrends, the 10 is less than the 20 and the 20 is less than the 30. And again, that is illustrated down here. You can see Landry proper order. Again, just click here to load the plugin. And you can see that it does help to keep you on the right side of the market. Now, just because the indicator shows that you have a lot of upside proper order, that doesn't mean that you should continue to stay long just because of that. You obviously want to have stops in place if you're trading a market. And also, you want to look at the market itself. So right here, we had many, many days of uptrend proper order, about 70 or so. But notice that the market has lost a little steam. It tried to get the brand new highs, but then came right back in. Also, don't forget to draw your arrows. I'm known for drawing big blue arrows on the chart. So right here, you could draw an arrow sideways. You can see it didn't make a whole lot of progress. Tried to make all-time highs, but then came back in. Now, keep in mind, if you're using something that's moving average base, you're going to have some lag. All indicators have lag, by the way. So this might take a little while to catch up to the market. And you can see that the market lost steam for a long time before it actually began to roll over. When you're in neither uptrend proper order or downtrend proper order, it'll illustrate yellow down here. And that usually means that the market's making some sort of transition or has become choppy. But now you can see we've had mostly red for quite some time. So the dollar has rolled over and the dollar does not look good. That is a good thing, though, again, for stocks, commodities, and crypto. Speaking of crypto, crypto is on fire. Lately, all I've been doing, for the most part, I'm still trading some pullbacks here and there because that's my bread and butter, trading pullbacks in crypto and other markets too, especially stocks. But in crypto, it just seems to be going straight up. And what I've been doing lately is buying markets that have gone straight up. If you sort your cryptocurrencies in ACP, sort them by the percent change for the daily change. And what I call this is just RS trading. We're just looking at yesterday's price and today's price, and we're looking at the strongest pairs. And with a few caveats, you can pretty much buy the strongest ones. Make sure you have a solid money management plan in place, and you can capture some fantastic trends. For instance, this morning when I pulled this up, I noticed that STX was towards the top of the list. I did take this trade yesterday right around here, and then it stopped me out right before it took off. But that's okay because I was trading other crypto pairs too, and I ended up flipping this one out for another one that did take off. Now, before I show you a trade off of relative strength, let's take a look at Bitcoin real quick. Bitcoin has been doing fantastic. If we take a look at the Landry Light, once again with a 30 EMA, notice that we've had 65 days since we've touched the EMA. It almost touched it here a few days ago, but so far, so good. This is a good looking chart. Now, the altcoins have really been on fire, and again, for the most part, all I've been doing here is just buying the strongest ones with a few caveats. They have to be thick enough to trade, and ideally, I want them towards the top of the range. So with this AVAX, you can see I bought it right at these new highs. The red line is my entry. The green is my initial profit target. And lately in crypto, I've just been using 20%. Now in stocks, it all depends on the volatility of the stock, and I make some calculations just kind of looking at the stock's range, looking at how many points it moves around, looking at the 50-day historical volatility, which, by the way, you can plot here in ACP. It's called Landry volatility, but it's not proprietary. It's actually open source. It's just normal statistical volatility. But in the case of crypto, crypto has just been on such a tear as of late. I'm just using a 20% profit target. And in some cases, it's hitting it within a few days. Some cases overnight. I had one hit overnight, VET. Anyway, you could see the entry was here and then it flipped out half at this initial profit target. Now, once you get your initial profit target out, I'm throwing a little money management here. Money management, by the way, is crucial in whatever market you trade. And lately, I'm doing a lot of presentations on how us more experienced traders have an unfair advantage almost when it comes to crypto because we know how momentum works, we know how important money management is, and then, of course, mentally, we know from a psychological standpoint, you have to be willing to get out of the way when things go bad. And that's okay because a new bust comes along so quickly, at least lately. Now, keep in mind, things change. By the time you watch this, maybe crypto is going to be in a bear market again. But the good news is these bull markets come around fairly quickly. Now, again, once you hit the initial profit target at 20%, you take off half of your shares, and then you bump your stop to break even. So the stop would be right here once this occurs on the remainder. And then you trail fairly loosely on those remaining shares. And the idea is to stay in a position for a long, long time. I have a few that have gotten in a few weeks ago that are now up 100% or so. Now, it's not always this great. Obviously, things change quickly, but right now, you could pretty much play the RS game in crypto. Now, in stocks, again, stocks are doing fantastic. I'm a pullback player. I'm not playing the relative strength game there. What I'm doing is I'm waiting for setups. I'm waiting for a pullback and managing my existing setups from the last round. So just be patient in stocks. We should see a plethora of setups there. In the meantime, take a look at crypto because crypto has been on fire. So I want to thank you for watching. If you had any questions, you can send them to Dave at DaveLandry.com. Here's my contact information for X. Also, I do a weekly live webinar every week, usually on Thursdays. And you can go to DaveLandry.com/webinar to register, or you can find it live on YouTube, usually again on Thursdays. And that's at 6 o'clock Central Time, 7 o'clock Eastern Time. I want to thank y'all for watching, and may the trend be with you.